Hello and welcome. My name is Benoit Poliquin and I'm one of the portfolio managers and the founder of Exponent Investment Management. And welcome to our first quarter 2020 shortened quarterly review video. We made a much longer video that lasts over an hour that will get through all of the details, but we thought we'd make a very short introductory video if you just want to get the Coles notes of what happened in the markets, both in Canada and the US in the first quarter. So let's get started. Three key drivers of this quarter's performance. Obviously, COVID-19. We have to talk about that quickly. Global health pandemic as we know it. And life as we know it really shut down. That means basically through social distancing globally, social distancing efforts, a large part of the global economy is effectively shut down. The part of the economy that shut down is anything that is client to client or retail oriented. So not only stores, but also construction, many part healthcare. So think dentists, chiropractors, a whole host of professionals have been asked to shut it down. The investor reaction to COVID-19 for the first half, say, of the quarter was somewhat muted. The virus was really prevalent in Asia, and so North American investors were worried about the supply chain and obviously the global growth impact of social distancing in Europe or in Asia. But it's not until the virus made its way to Europe and eventually North America that investors, North American investors and global investors altogether, really stood up and took notice. The speed and the depth of the market drop was unprecedented. 30% plus drops in less than a month. Market technicals forced this sell-off, and in our longer video we go through it in much more details. But the summary is many investors were borrowing to invest. Happens all the time at the tail end of a bull market. As people make more and more money, investors are really driven by two emotions, fear and greed. And so greed was really the emotion driving the decision making. And so investors were taking on debt, taking on additional risk. And when the markets turned south, many investors were forced to sell. So the sell-off was dramatic, but also very short because many investors were forced to sell. If we look at the performance for the quarter, we saw the Canadian market, the TSX, down almost 21%. The S&P total return in Canadian dollar terms was down 13%. And the NASDAQ was led by the likes of Apple and Amazon, who fell, but a lot less. And so the return in Canadian dollar terms was less than a little over minus 7%. The European markets also suffered, as did the emerging markets. The Canadian dollar depreciated, meaning the US dollar appreciated against our loonie, and the bond market did reasonably well with posting a positive 1.6% return. So let's look at the investor reaction has been both deep and swift. The S&P 500 was down 34% in 23 days. We'd never seen that. The TSX was down 37% in 22 days, with the bottom being around March 23rd. Since then, as the time of this video, we were really experiencing what we know as a rally, where most stocks or the indices, I should say, are up 20% plus off their lows. It remains to be seen, is this the start of a new bull market, or as we go through our more extended videos, is this part and parcel of a typical bear market bottoming process, where we have these rallies and then these ebbs and flows. So clearly we've entered a bear market. The rules are a little different, so we're going to go through in our longer video as to how to navigate a bull market. But let's safe to say that you want to be careful about not necessarily buying the dips, and really having understanding that when stocks go down, the correlation goes to 1. Otherwise, in other words, you can't hide. You want to take this opportunity to upgrade quality of your portfolio. So that means you need to find liquidity both in your personal life and also in your portfolio. And you need to have an open mind and data-driven decision-making process. Really, you want to check your emotions at the door, which is something that is very difficult to do in the bear market. And you want to have price targets both on the entry points, and if you want to sell into these rallies, you really want to be diligent around your exit points. Again, we're going to cover that in much more detail in the longer videos. So past bear markets, what can we learn from them? For many of you, this is a new experience. This is the first time you go through a bear market. So what we did in the longer videos is we went back in time. We looked at the 1987, 1999, 2001, and 2008 and 9 bear markets to see if we can sort of spot trends. And you'll see in the longer videos that there are trends. Most bear markets more or less behave the same way. Effectively, there are 3 stages to a bear market. The initial fall, which we experienced late in the first quarter. Then there's a rally, sometimes known as a bear trap rally or relief rally. And then finally, usually there's a retest. And now this is where it gets tricky. The retest may or may not go as low as the initial fall. It may be a short time, say 4 weeks or 6 weeks later, or it may happen a few months later. In this particular case, we feel that whatever transpires on the public health front and the economic front will impact, obviously, what happens in the market. Remember, investors look forward, rightfully or wrongfully, in terms of what their anticipation will be of future market events or economic events. If we quickly run through the Canadian market summary, we see that the TSX, as we know, is really made up of 4 sectors: financials, banks, and insurance, really the largest one. And we have energy, materials, and industrials more or less coming are equal weight. I can remember when energy actually was almost 2 or 3 times what the current weight is now. But effectively, graphically, we can see the chart on the right where we saw the TSX fall really starting in mid-February all the way down to the last week or second last week of March, where the market was down 37% in just a few days, just over 20 days. If we go over to the US market, the selling was just as broad, just as swift. There were a few more pockets of sectors that did well. You can think of pharmaceuticals. You can also think of consumer staples. So think about grocery stores or cereal makers. That type of industry or business did actually, many of them actually went up. Again, peak was February 19th, and the bottom was March 23rd, and the market went down almost 34% in that time frame. So again, selling was swift, was very short, and you can see here a bounce, and this rally is continuing as we speak. So the conclusion, if you want to get to the answer right away, we are certainly in a bear market. That's pretty clear. We're also in a recession. The question is, how deep will it be and how long will it last? You want to start having liquidity as the first step to position your portfolio for the next bull market. We expand on that in the longer videos. Bear markets have 3 stages, as we've covered, and they also give way to bull markets. Bear markets always end. Thank you very much for watching. If you have any questions or comments as we expand our video producing capabilities, if you're looking to have us produce videos on either market conditions or situations, particular stocks, particular decision making, or even financial planning questions, please drop us a line. Our email address is info@exponent.com. I'm Benoit Poliquin for Exponent Investment Management. Thank you very much for watching.